what's up? This is your boy AJ, and today I want to make a video on how to get started trading. A lot of people seem confused on how to get started. They want to know how much money is you have to risk to get started. Well, fortunately, there is a way to get started without any money and to get your foot in the door and to start learning how to trade and learning a strategy that may benefit you and learning the core concepts like risk management and psychology side and all that stuff. So the first thing you want to do, just so you can start practicing, is you want to go to TradingView.com, open up your browser on your phone or on your desktop, go to TradingView.com. Here it is on top. Once you're here, you want to click on this little person over here, and you want to make an account. So in this scenario, I already have an account, so I'm going to go ahead and sign in. Once I'm in, you can click on products and click on super charts, or you can download the application to your desktop or download the app from the Google Play Store or Apple Store. So once you're here, I trade the ES. So let's go ahead and type in ES, and ES is going to be the index of the top 500 companies here in the United States. And we're going to be trading futures. I don't trade funds. I don't trade forex, crypto, options, or nothing like that. I trade futures. So if you want to trade futures, then this video is for you. Go ahead and click ES, and let's go to the S&P 500. We're going to be trading minis. So here is your chart. A lot of this extra stuff is because I use this all the time. I use this to trade every day, so you can see a lot of extra stuff right here. But this is your chart. These are called candlesticks, and by default, when price goes down, which is called a short, you're going to have red candlesticks, and the wick is a point where price. This is called the wick, the line. That is what when price reached a all-time low in that certain time frame. So we are on a 5-minute time frame. So this candle represents 5 minutes of price action. Uh, and if you have see a line to the top, that is called a candlestick high. So that should be your candlestick, your time frame high and your time frame low, and the body is going to be in this case we're going to have opened up on top right here, and we're going to have closed right here. And this one right here, usually where you have a close, you have the next open and close. And then the green is going to be, since green is meaning that the price went up, it went long, so that your opening is going to be towards the bottom and your close towards the top. You open at the top because we're on red, close on the bottom, open on the bottom, close on top because we're green. Long, short, red, short, green, long. And you can change the colors. You can go into your settings and change the colors to whatever suits you the best, right, under this. So now that you know the basics of candlesticks, now we have time frame, right? We have 5-minute time frame, we have 3-minute time frame, 1-minute time frame, 15-minute time frame, 1 hour. So when you're gonna set your key levels, and that's gonna be another video, um, you're gonna use higher time frames like 15 minutes, 30 minutes, 1 hour, 4 hour to set your key levels, which can hold the liquidity and trapped sellers and buyers. So then we're gonna utilize like the 5-minute and the 1 minute to and 30 seconds too to make executions. And your strategy might be different, so your strategy might need you to do execution on a different time frame or a different time frame to make your key levels and identify liquidity and market gaps and such. So once you got that figured out, that's the very core basics. You want to click on here at the top right corner and click trade. Once you click on trade, you're going to see all this stuff. You might ask yourself, what is all this? Well, these are different brokers that you can connect when you're actually trading real money or prop firm accounts. So since we're doing a free trading, we want to simulate the market. We're going to click on paper trading. Just press connect, and now you're paper trading. And my paper trading balance shows that I'm up to $129,000 because I used paper trading for the last couple of months, and it was $1 million account at first. As you can set it to whatever size account you want to. You press reset account and you can select the dollar amount that you want to make it. By default, it gives you $100,000. So this to show you that I'm a profitable trader. I'm paper trading, testing, back testing strategies all the time. So you can just see that the account's naturally going up because what I trade actually works. And sometimes we use this to come back test or come show trades we took live. And I make YouTube videos and we use this, so then that's a winning trade all day because it won on live and it's gonna win on the back test. So that profit we made accumulates right here. Anyway, so now that you are paper trading, right here we see the market is moving, right? So let's just say you found a setup that works for you, and we're gonna come down here and we're gonna enter a trade because you think the price is gonna go long, right? Awesome. So you click on trade right here. This opens up the DOM uh, window, the order panel, in other words. So back to my other video, always make sure you set your risk management. And TradingView sets its risk management by ticks. So there's always going to be 4 ticks in 1 point. 1 point reflects $1 movement of the price for that certain index you may be trading, whether it be NQ or ES. And each index or commodity you're trading has different monetary value for a point or a tick. ES has a tick value of $12.50 when you're trading minis, and 1 point is $50. And when you're trading, when you're trading micros, uh, I'm not too sure on the price difference on micros because I don't really trade micros, but just do a quick Google research and you'll find out your answer. But always keep in mind 4 ticks per 1 point. 1 point equals $1 of price movement on the chart, and for ES 1 point is $50, and for NQ 1 point is $20. So that means $5 per tick on NQ, which is NASDAQ 100, 100 of the top technology companies here in the United States. 1 tick, $5, 1 point, $20. S&P 500, 1 point, $50, 1 tick, $12.50. So let's enter a trade right here. So 40 ticks is going to give us 10 points. 10 divided by 40 is 100 divided by 40 is 10, and we're going to have a stop loss of 20. So we're doing a 1 to 2 risk to reward ratio. So let's go ahead and we're going to just imagine that we're going to buy right here, okay? Or we're going to sell. So let's sell, and I'm going to move my take profit and move my stop loss so we can hopefully close the trade out within a couple seconds. So we can see how the order panel enters the market and exits the market when you take a stop loss or take a take profit. So we're going to move our stop loss right here, and we're going to move our take profit right here. So let's see if we get stopped out or we get take profit. And as you can see, we got stopped out. So that's just an example of how price moves. That was not a valid trade. Okay, so now that you can see how to place an order and exit an order by your risk management in the market, you can go and finally look for a strategy that works for you. If you want to learn our strategy, our link is in the bio, and join our Discord. It's totally free, and you'll see our strategy. And we live trade every day from Monday through Friday at the New York opening range breakout. And we have 3 setups that we look for and we use. So join us. We go live on TikTok. We're probably gonna be going live later on, like on Kick or something like that. But for now, TikTok seems to be doing the job just fine. So I hope you answered all your questions today. And don't forget to like and subscribe. See you guys on the next one.